My name is Curtis Silva. I'm the social and digital media manager here at My Credit Guy. We also have Brett Robinson here, who is our new director of credit education. We're going to hand it off to him as he kind of moves us into our topic and introduces us to our guests here. So, Brett.
All right. Hey, thank you, Curtis. Thank you for that introduction. Man, I'm excited to be here. How about you guys?
Oh, absolutely.
Super
excited. Josh and Stacey, thank you for taking some time out of your very, very, very busy days to come on here and show your smiling faces our viewers at home. Again, I'm Brett Robinson. I'm the newest addition to the crew. I'm sitting in the role of the Director of Education and Veteran Outreach. Really quickly about myself, I'm a 21-year retired Air Force veteran and service-disabled veteran as well. I'm out here in Orlando, Florida, where it looks like the rain is coming, but hey, it's all good. It's going to warm up here and we're going to enjoy some nice weather coming up. And then I'd like to introduce our two panelists today. We have Stacey, is Glew?
It's Glew, yep.
Glew. I
just like the glue, Elmer, sticky, all that stuff.
And Josh Worthen, right, Josh?
Josh Worthen, but you were pretty close.
Worthen. Yep, I'm new.
So, you got to pass.
I'm learning everyone's name around here. So, yeah. So today we've got a really fun topic. We're going to be talking about some of the pitfalls that people fall into with credit. And it is the infamous co-signing, to co-sign or not to co-sign, right? So this is a topic where when I was sitting with some of the credit coaches, people are saying they're getting ready to do things. For instance, I was just the other week, I was sitting with a coach and somebody said that their high school age kid needed a car and they're working and they were going to co-sign a car for them. And the credit coach was like, hey, whoa, you're here to buy a house in 3 months. Do not do that. And I was like, put him on a bike. Tell him keep riding that bike until you get that house, or put him on the bus or whatnot, but yeah, that was a very big, it was like, no, it was kind of part of the investigation, I guess, where that coach was doing with that client on what they've got coming up and planned and whatnot. So today's topic is co-signing and the effects of co-signing on one's credit. So Stacey, before we roll into the education portion, can you quickly tell us about yourself and how long you've been with the company and what role you serve? And I know what you do and you're amazing, but tell the people who are watching at the house what you do.
Yep. So I've been here, it'll be 5 years this year, which is awesome. And I'm in the Vinton office. So I live here. I'm from Iowa here. So yeah, I've got 2 kids, husband, the normal.
No big deal.
Midwest thing. No big deal. We're in here every day doing credit. And
this is a good old Iowa story.
Yeah, good old Iowa. You go from snow to nothing to 60 degrees. It's cool. It's cool.
Just watching wrestling.
Yeah, watching some wrestling. Absolutely. It's wrestling time.
I love it. 5 years though. 5 years.
Yeah, it'll be 5 years this year.
In the business, and geez, the stories that you must have. So I'm looking forward to picking your brain and learning from you and all that good stuff. So thank you for being here. Now, not only are you what role did you start off with when you got here?
So I was credit coach when I came in. I've done billing. I've done all kinds of things. And so now I'm one of the managers here. Awesome. So I'm a team lead with credit coaches.
Awesome. So you have your own team.
Yes, I have my own team.
Great. And I hear nothing but amazing things about your leadership.
Well,
so really appreciate what you do here. Absolutely. And we're just part of when you just hit your 5 years last week, right?
No, my 5 years actually is at the end of the year. So it's 4.5, basically 4.5, we're going to say.
Okay. 5 years though.
But it's going to be this year.
Right?
Yeah.
Yeah, it's like enough. It's been long enough, right?
Right.
I'm an OG, right?
Yeah.
All right. Well, hey, thank you for being here. Thanks for what you do.
Thanks for having
me. All right, Josh, in that awesome black shirt. I want one of those black shirts. Who's ever listening?
I need more. Definitely.
Hey, Josh, why don't you tell us about yourself, brother? Thanks for being here.
Yeah, so family man, husband, dad, 3 kids, 2 dogs, busy, busy. We're also super deep into wrestling. I'm actually from LaPorte City Union. Go Knights, woot woot. Um, I have, when I initially came here, I was a credit coach. I've done a little bit of everything as well. Was a team lead for a while, and now I'm currently an onboarding specialist. So when people are looking to get enrolled, I'm the guy that they're going to talk to. I'm going to go through their report, make sure we're a good fit for them, because we don't like to take just anybody, and we want to make sure we're going to be able to help. So
That's awesome. That's awesome. What a good person to figure out if someone's good enough, not good enough, but a good fit for our company. I know a lot of people, they just automatically think, oh yeah, I'm going to go work with these people. And no, it's got to fit for both of us, right? It's got to fit for the company and for the client as well. So I know sitting with the credit coaches, there was a few times where, well, actually not the credit coaches in the inbound, where some of the conversations were, hey, this is all you need to do and you don't need us, right? So I thought that was really cool that we were just handing some folks some information that would help them out. And I know that's what definitely adds to our stellar reputation in the customer service folks. But folks like you guys are why we have such a great reputation in the first place. So again, appreciate what you do. Just 2 Iowans getting it done.
Yep.
I love Iowans, man. My step grandmother is from Iowa, and my mom is from Iowa. And I just know y'all some good folks, man. I'm like, oh, this company I'm working with is like everyone's from Iowa.
Yep.
I'm in Arizona where
and then they migrate to Arizona. That's
my mom
cool.
and dad live now. Yeah, you get tired of the snow, and then
Yep.
you go to Arizona.
Snowbirds.
no, not all of us. Some of us
Not all.
actually enjoy the snow.
You look
You like
a
the
big
snow,
old
Josh?
Oh,
bear, Josh.
it isn't Iowa without some snow, and I couldn't imagine living
man.
anywhere and not getting snow.
Maybe during Christmas
honestly.
time.
You just said
That's about
some
it for
snow
me.
like it's nothing. Like
Yeah.
I was sitting with Marcia 2 weeks ago, and people's cars weren't working. They were like, "You need to go warm your car up because."
Oh yeah.
I was like,
Not a fan of the cold.
I don't need that in my life. I don't.
Yep. Cold, definitely not a fan of, but I
Yeah.
do enjoy the
Yeah,
snow.
it was like stay home today because it's like you can die out there. Like I don't want to be I don't want to be there. I don't want to be somewhere you risk your life going to Dunkin' Donuts. You know what I mean? I'm just not into that. So I'm gonna stay here in Orlando and enjoy my weather out here. But God bless you, Iowans,
Yes.
the heartland of America.
Yes, we are good people.
I know. All right. Well, hey, we won't delay the viewers at home any longer. Let's get into it. Stacey, when do people use co-signers typically? When do you usually see this happening?
So on a home loan, car loan, student loans at some point, you're gonna need a cosigner. It's basically, I mean, they're helping you get into that loan so you
Yeah.
can, there's several different ways, but those are the main ones.
Yeah. And I know, I mean, being a parent, I mean, my kids are not of the age where they just ask me to buy them things on their iPad. They're about to be 5, right? So that's the only thing I'm buying them right now. But
Yeah.
but when you have those older children, right? That's when you see a lot of this, right, Stacey? Like I'm sure you get clients who they've been co-signing for their kids now, right? They get kids in college and whatnot, and they're just co-signing for their kids. And Josh, you see that a lot where that's mainly who's co-signing for people is like mom and dad.
Yeah, definitely mom and dad trying to help, get their kids a leg up for sure.
Yeah. Yeah, absolutely. Trying to set them up right and all that good stuff. And
We actually have a question down here related to that a little bit. We have Jocelyn who asked, I don't want her to feel left out here. She asked us a few minutes ago, but she's wondering if co-signing is a bad idea, even to even for your children. Like, what do you suggest to them to help build their credit without possibly ruining your own?
So, I mean, you could definitely co-sign, but you're going to be on the hook for that. It's if they don't make that payment, that goes against your credit as well. So honestly, get them a little credit card. I mean, that builds credit. Get the credit builder card for them. That's what I would do. Josh, what do you think?
Yeah, definitely. Or if they're not in a position, maybe they don't have a credit card, you can always add them to you to get their credit
Is an option.
established and
Great
straight
idea.
and go from there.
Yeah, great. Let them kind of use your credit history, your length of your credit history and all that good stuff and your utilization rates and whatnot. Like kind of let them inherit that, right? Like
Mhm.
I plan on like for my children's 16th birthday, that's going to be my present to them. Dad is giving you his amazing credit. You know what I mean? Like don't jack it up like I did
Right.
when I was 18 going into the Air Force, and nobody taught me any of this stuff. So I love what I do here because it's just all about the education and learning from you guys and then getting out there and getting to pass along that information. And I just find myself talking to my friends now, like, hey, I know the age of your children. What are you doing? How are you setting them up? My mom and dad gave me $500 and told me good luck. I was like, I didn't want $500. I would have appreciated maybe being on their credit or something like that. So I wouldn't have started out, life. I think I was paying $400 for a $3,000 Honda Civic hatchback back in '97. That was
Yeah, that's what we did back then. It's
that was a
different
lot.
now.
$400 a month was, I was eating a lot of ramen noodle back
Mhm.
then. See, so, but co-signing is definitely something that we want to be careful on. Can we talk about the risk really quick, guys? Like the risk of co-signing, like once you do this, like it's not just something where you need to think about down the road, right? Like what are the risks when you co-sign for people?
Yeah, like Stacey said, just the financial risk. You're on the hook. Even if that money's not coming to you, you're responsible for it just as much as that person who's
Right,
getting the loan. So
right.
that's the biggest thing you got to look for first.
Yeah, and definitely if you're a cosigner and they don't make their payment, they're gonna come towards you and
Mm-hmm.
say you owe them that payment.
Absolutely.
Um, it's just you gotta know the relationship of the person, and make sure that they're gonna keep on that.
Mm-hmm. I have a buddy of mine who his daughter's in college. She's over here at the University of South Florida, and all of her bills come to him. Like all of them, like
Hmm.
all of her bills come to him, and the ones he's on, because he has been helping her out, but he's like, I'm making sure she's paying them because he's
Hmm.
on there. So I
Right.
mean, sometimes it's inevitable though, right? I mean, it's like we have kids and we have people in our life that we want to help out, but we've got to consider the risk of this, right? Like the risk versus reward. Like if we're trying to buy a home or get a car loan or something like this, you gotta sometimes you gotta say no,
Right.
right? That's the
Yeah.
hardest thing
Sometimes
in the world is
sometimes you got to weigh your relationship with that person as
yeah,
well, because I've talked with people that have come into our program and they were not speaking to even one of their own children just because of
wow,
the situation they got put into.
wow,
And they now that disconnect is there, it caused a rift in between them to the point where it's like, you know what, I don't want anything to do with you. So don't ever think
wow.
that that can't happen. I've spoken with people firsthand where, I would have never thought we'd get to this point, Josh, but here we are. And, so that's something you're going to want to think about as well.
Yeah,
Yeah,
even with kids and marriages too, like you were saying before, someone's not going to co-sign for you. But honestly, a husband and wife co-sign, let's God forbid they get a divorce, I mean, like then there you go. Like you guys are both on the hook for that. So, there's things to think about.
absolutely, absolutely. So that looking at those financial risks and like I know another thing is some people don't want to ruin their their relationships with like their credit they have like they have a good relationship with somebody who maybe they don't want their family member utilizing, right? Because then they're gonna, hey, hook me up with your car guy, right? And you're like, no, I don't want you talking to my people because they like me over there. And you might go over there and jack some things up in my name, and then now they don't want to deal with me anymore. So these are all things to consider. And like Josh said, relationships are crucial. Like he'd say, he's people not speaking to their family members anymore over co-signing. So they definitely have to be careful. Um, what are some of the benefits? Let's talk about. We don't want to be doom and gloom here. What are some of the benefits that you guys have seen when somebody helps somebody out?
So the longevity of the credit card, or I'm sorry, the loan or even credit card too, I mean, your pay history is great. That's huge. No lates. We don't want any lates, anything like that. So.
Right, right, right. So by co-signing, well, we've seen people benefiting because someone has co-signed for them and they did the responsible thing, and now they're ready to get into our program and continue that good path of like rebuilding their credit, right? So like I said, not the worst thing in the world. We just want to educate folks on the kind of the dangers of it, right? And then also like before, because some people sitting here watching right now might be in that position where they're being approached, and we just want you to have all the options in front of you, right? So you can make an educated decision. But also though, the benefits of helping somebody and then seeing them, blossom and get their credit turned around, because we're all in different situations or social economics, situations and whatnot. And it's all based on, some of us are just trying to make it. I know I kept seeing like every time we were talking to somebody, student debt, student debt, student debt, student debt. I'm like, wow, what a big dilemma that folks who are in that situation, that all those student debt folks that we help out on a regular basis. So but yeah, so you could be helping somebody with a life purchase that they may have not even been able to get without you, right? Like just changing their life. You can do. My father, when I bought my first home, he said, son, he said, I don't want to co-sign, like, because that's your house and I don't want to put my name on your house, but I'll lend you 10 grand. I'd rather do that than put my name on your home. Right. So I was like, that was really, and I appreciate that he did, he's like, I don't want to, right. My dad was like, I don't want to come hunt you down. Right. You know what I mean? Like, I don't want you to mess up my good credit. So I'm going to lend you some money and we're going to take care of that, between each other. So I was sharing with you guys earlier, I was checking out a credit seminar earlier, and the gentleman who was running it said that him and his wife, if they ever had to ask each other to co-sign, they need to be done. Like they never should be in a position where they need to utilize each other's credit. And I thought that was pretty amazing. He said that is, that can cause divorce, right? Like my mom and dad were, always at it over money and whatnot. So it's definitely a big deal. Are there any alternatives to co-signing? Are there any other things people can do to help people out besides co-signing? I mean, my dad lent me some money, so I kind of highlighted that. But what else can you guys think of?
So with the co-signing too, you just have to remember that it's a loan for a certain time, you know what I mean? But really to build that, and it's building that to help them get their credit scores up there. But the credit cards, authorized users, putting them on that. Would you agree, Josh? I mean, that's the biggest
Yeah,
thing.
that's fine. That's definitely fine. But also too, if you do decide to co-sign, because there are, situations where we might feel comfortable enough and think, this person isn't going to end up causing us credit harm. You want to become the primary borrower. We want to make sure of that. So then that way, if something's happening, you're getting those notices. So you want to be first to sign. But at the end,
great advice, Josh. Can you say that again? That's a really big. Can you repeat that?
You want to be the primary borrower or the first one to sign. Be the first one to sign. It's the same. It doesn't matter if you sign your name on the second line, on the first line. The only difference is you're going to get those notices, and so you're going to know if you're getting, hey, your payment's due. You can call up little Johnny if you signed for your son and be like, hey, what's going on? Are you going to be able to make this payment? And you'll be able to catch that usually ahead of time. But at the end of the day, I just say don't do it. That's the best alternative.
Yeah.
To be honest.
We do have some questions down here, guys. And we can get to them in just a second. I just gotta just had to pop that out there real quick. Circle back to those in just a moment.
I just hit you in the chat. Yeah, I got Facebook pulled up on my phone here, so I was just just typing that. I could see them. Yeah. So hello everyone out there. There's a lot of folks chiming in. Hello, some of the folks from the My Credit Guy crew out there. So hello to the family out there watching. Daniel has a question. I have a bunch of credit cards in college. It took years to get out of debt. How do we avoid going in debt when kid goes to college? Does the school expect me to be on their loans? What can you guys tell us about you've seen the student loan deals?
So with the student loans, a lot of things factor into those in order to be a co-signer, things like that. Like it really depends on, what the financials of the situation. I mean,
Yeah.
um, if you, sorry, I'm trying to think on the spot here.
Yeah, no. I mean, it's a unique
It's a
question.
great
I mean,
question. It's a great
yeah,
question.
it's a great question. He's saying, how does he avoid going in debt when his kid goes to college? And, like that's just something where there are plans out there where they have college plans that you can invest in early. And so I guess, Daniel, we probably need to know a little more, like, is your kid about to go to college, or are you 10 years away from that? This is just, Brett here, but everybody, this is just me, how I feel. This is my views only, right? Only Brett's views. Everybody doesn't need to go to college right away out of high school. That's all I'm going to say about that. That's all, So maybe you want to take a look at who is saying that they're going to college, and are they proving that they're ready to go to college? I wasn't ready to go to college at 18. I went into the United States Air Force. Best decision I ever made for myself. My dad made me go, but I like to say the best decision my dad ever made for me. But because I wasn't going to college, I was working at Wendy's chasing the ladies around, and my dad was like, "Hey man, why don't you do something better for yourself and get out of here?" So my dad did 24 years in the Air Force, so it was kind of an easy decision for me. But that's all I want to say about that, Daniel. I think we'd have to weigh all of the factors that go into it. What is your child going to be studying in college? What are they going to be doing? What are they going to be focused on? Like, I would look at it, if my children came to ask me about money for school, I'd look at it as an investment, right? Like we're investing in our children if we're going to pay for them to go to school so they don't go into student debt, right? Or we're going to be, like Josh said, co-signing for them. Like we got to weigh, is this a win? It was a win-win situation, right? Josh is like, is this going to be worth, my credit and whatnot? So definitely a good question. And then Daniel saying he's still in student debt at 50, which is, my wife is still paying for college, and she's been out since 04, I think. So that's something to think about, Daniel. If you're still in debt at 50, do you want your child to be in that situation? So just weigh the options that you have, and we can.
And some schools, they do offer various programs along with not only the financial aid portion of it, but you can work on campus somewhere sometimes.
Oh yeah.
To help offset the cost.
Study.
So
Those are
a lot of scholarships out there, a lot of
options.
grants, right? A lot of scholarships and grants out there that you can. I had a friend, his daughter, she had a great GPA, qualified but she still was applying for, I think she got 40 different types of grants and stuff for her to go to school over here at University of Central Florida. So she was looking up all those on her own, and he's a computer guy, so he was making Excel spreadsheets for tracking it all, and they really did a good job of laying it out. And he was like, I don't have to pay for anything for her. He's a veteran, and he's got some special things he can give her, but she doesn't need it. She doesn't even need his benefits, because she looked all that stuff up on her own. So I guess what we're trying to say is, with
I would
kids,
have the kid do it. The student be the
You
person
wanna go
to
school,
try
right?
to
There
get
we go.
everything, and then an absolute like last resort, then be a co-signer,
Yeah.
But if your child can get all that information and get the grants, and more power to them, that's awesome.
But you heard what the lady said. She got the ton of knowledge. Absolute last resort is to co-sign. And that's definitely something we want to get out there for everybody listening. Absolute last resort. Let's look at some, like Josh said, some alternatives, right? Wink, wink.
That was for Tony's question.
Tony, can you explain the risk of co-signing on a vehicle loan and having multiple inquiries? Wow. Is that still a thing? Also, Josh, who has better credit, wrestlers or basketball players? Wink twice for wrestlers.
That's awesome.
I'm not going to bash on basketball players, but I am going to say wrestlers have a hell of a work ethic and they know how to get things done. And
yeah, so it transfers over. I know,
Yeah.
man. Listen, I agree, man. Basketball players are lazy, man. They're spoiled. They
Oh,
are.
yeah, we're
Brett
not going to go
said
that
it.
far and say
Brett
that. No,
said
yeah,
it.
we didn't say that.
I said it. I said it. I'm a veteran. I can say stuff like that. I'm a veteran. I'm just kidding. But no, but I mean, I'm just saying basketball players, they're not lazy. But they're very like, man, like they're well taken care of. And I know wrestlers, it's all about the hard work and the, like you getting down, you're getting beat down and all that. And like basketball players, they don't know how to fight. They don't know how to do nothing. They don't know how to, you see the basketball players fight is like, somebody hold me back so I can act like I want to fight, like they don't, basketball players don't want to get in there. So, listen, I saw the ESPN Broke documentary. Wasn't no wrestlers on there. Wasn't no wrestlers. So, well, some pro wrestlers, some WWE. guys,
WWE.
but no collegiate, no United States.
No Big 10 or Big 12, anything
no
like
Big
that.
10 wrestlers.
Mhm.
So Brock Lesnar's got good credit. So he's.
oh, I bet.
I bet.
He's very well. I think he's got his own beef jerky company and all that.
I was gonna say he's got enough
awesome.
money.
And
It
if
should be good.
if he doesn't, he's just going to flex on those scores and they're going to jump
Tell
right
you.
up.
Yeah. A credit score has a Brock Lesnar. Brock Lesnar doesn't have a credit score.
That's right. That's right.
So the risk of co-signing on a vehicle loan and having multiple inquiries. I just had a question about multiple inquiries over on another Facebook page that I'm a moderator on, where they were asking the effects of multiple inquiries. Stacey, can you tell us like the effects of multiple inquiries?
I mean, once you get quite a few of them, yes. Is it going to be detrimental to your credit? Absolutely. But honestly, I tell my clients too that your lates and new collections are going to be worse for you and hurting you more than these inquiries. Now they do fall off within 24 months, 18 to 24 months. Obviously, if you go to like a car dealership and they're going to check your credit like 14 times, you really don't want to do that. That's a huge amount. Like that's just massive
Yep.
because they're trying to get you that
Why
fast.
would they do it 14 times, Stacey? I'm sorry for interrupting.
So
Can you
no,
explain
you're
why we
fine.
do it?
It's basically to get you the best the
Yeah.
best rate for you because they have all those different things like 0% for
Mhm.
this, but you got to have the huge credit score to get that. I mean, sometimes it's worth it, but really now that I know that, I don't even go to a car dealership anymore. I go to my bank. I say,
Yep.
this is what I can do. This is
There
what
you
I can
go.
pay a week. And they're like, okay, here you go. You can have the money. I go to the car dealership and I say, this is what I have. Here you go. I buy it.
Yep.
There you go.
It's the best way. You got one
Yes.
inquiry. Yep.
Secure your financing up front if you can with your local bank. And sometimes too, maybe your credit scores aren't quite there. And if you've already built a relationship with your local bank, I've seen where some of those lenders would be like, yeah, you're 20 points short, but you know what, you've been amazing with us for the last 10 years. So we'll go ahead and get you this loan. So you just put yourself in a better position there. And then also too, you're more than likely going to get a better interest rate a lot more times, I think, with your local lender, because those dealerships will farm out your information to as many people as they can, because some people are that borderline that can't get approved. And that's another reason why they send out and mass send it, because they want to get it back. Because at the end of the day, they still would like to get their sale. So they're going to secure financing if they got to send it off to 20,
Go
30
that big
people.
old net out there, right?
Yep.
It's try to bring all the fish in and say, here's your options, right? And sit you down and you go into the finance manager's office. And I was talking to this young lady the other day, and it was yesterday, and she bought her car in cash. They still ran her credit. She was real pissed off about it. They still ran her credit, and she paid for her car in cash, used car, like $6,800. They ran her credit, and she was really upset because she's like, she was like, Brett, how long is that going to stay? I'm like, that's, it's only going to be a couple points, but
another reason to watch what you're signing too, because sometimes when you don't even realize you're giving them, you might think they're going to go back, send it off to one or two banks, but once you sign that paper, you're giving them permission to sign it, send it out to
credit
whoever.
report after that, and they're like 14 different institutions, banks, whatnot, like you're like, what happened? Well, they went fishing.
The good news, even though you have that many, you're only supposed to be affected that one time score wise.
Yeah.
Because you are allowed to shop around within a certain amount of time.
Yes.
So you might get 14, but within, a couple of days, but only one of them is actually dinging you. But that's where you got to be careful too, because then there are other places you might try to get a loan. And it's not so much the score. Like we've seen from time to time, somebody gets that letter in the mail, you have too many inquiries. That's just their internal, hey, if you have this many inquiries, that's a red flag to us. Yeah. And that's all it is.
And I'm glad you said that, Josh, because it's about the data, right? It's about the data that's on it's not your credit score that determines it. It's the data that's on that credit report. And that's why we're always like, you need to be monitoring your credit. There was a guy in the Facebook group yesterday who was talking about he doesn't want to pay a monthly subscription fee, but he's asking all these questions about purchasing a home. I'm like, hey man, if you're wanting to buy a house, you need to be monitoring your credit right now. It's
absolutely
crucial. It's crucial that you know the accuracy of your information right now, because that's a lot of these places, they got their underwriting laws. And like I know for VA loans specifically, credit score isn't required. They can base your decision on your credit history, but a credit score is not in the underwriting rules for a VA loan. So they're looking at what's on your credit report. They want to look at the data to tell you yes or no. That you're not going to get the loan because of a specific credit score. I know a lot of times clients come to us, right? And they're like, I want to be at a 680. And you're like, you want to have the most accurate information on your credit report first.
Yep.
And I
get
know
what we can get off of there.
There you go. And when you're a credit coach, I know that's, you guys work with these people on making sure their information is, I'm doing a lesson on Fair Credit Reporting Act, and just, it's so crucial. Like, they only need like 3 things to drop, like to report your credit, right? They don't need sometimes the social security number is not even, they don't even have to have your social security number to drop that information on your credit report, right? Like they don't need everything you think they would need to verify it's you. And that's why we're so adamant on, hey guys, verify the information on your credit report. And I know that's like the first thing they're doing, right? Just onboarding, all that. Get that credit and monitoring. Let's verify this information. And your coach is going to make sure. And I sat through the training and I'm like, man, this is top-notch stuff that we do here at My Credit Guys. So Daniel's got another question. Daniel, thank you, man. Awesome, man. If he started buying a house 2 years ago and realized I want a different house down the road, how long should I stay here before I try and sell on a 30-year loan? I'm not in a big hurry. Ooh.
I guess it's going to depend on your equity. I mean, the rates, what you can get. We can't tell you how long to stay in a home loan before it's going to be bad. I mean, it's really going to be what can you afford? The equity in it, if it's going to be worth.
Yeah, the market, right? The market where he lives,
absolutely.
The market where he lives. Yeah, Dan, you want to take a look at.
That would be, and also that'd be something to, go to a lender, a loan officer, say, hey, this is what I'm looking to do. What's going to be the best benefit for me? They can talk with you, let them know, hey, this is what we can do. This is where your equity's at. Like it's worth talking with them. They're going to talk with you if you want to get a home loan, and then stick with that same person too. This is huge. Stick with that same lender that you're with, because they're putting time in for you, so let's, stay with that person and give them that at the end result.
Awesome. Yeah, there's so many different factors. I mean, it's a hot market right now, right? A lot of people are like, they bought and then they're like ready to sell and then get into something else that they want. So yeah, another thing is, are there any house, like is the house you want or that you want, like, right? Because I also have my real estate license, and I know, and I have friends in the business, and right now it's very hard to find a house to even go buy. So you got to weigh a lot of options right there, right? You got to weigh a lot of options where, you may make some money on the home you sell, but then you might end up renting until maybe the forbearance stuff starts popping up here coming up. I think maybe around 2022, we'll start seeing some homes, unfortunately open up because of that situation. But I mean, there's definitely Definitely a lot of options, rolled up in there. We want to urge you, if you have any other questions or anything like that, we just dropped our link on the Facebook page. It's at the very bottom. It's mycreditguy.com/you-made-it. You made it. So please hit us up there. And any final comments, any words of wisdom? I always like to say, what advice would you give somebody who's thinking about signing up with us, or any advice, whatever? I always like to leave these with, what advice do you have? Little nugget of information. Stacey.
So it never hurts to have your credit looked at and make sure that you are ready for a home loan. The worst thing we're going to say is, or the best thing we're going to say is, this is all you need to do. Get your credit cards down. You don't have any negatives, or this is the only thing you have. I mean, we're not going to we're not going to put you into the program unless you're warranted for it. We
Yep.
just don't do that. It's totally a family business. This is what we want to do. We want to help you get into your home. That's the end all be all of everything.
Awesome.
Also, too, if you are a good candidate for our program and you are looking for help, the success stories from our company come from those people who listen to their coaches and stay engaged the whole time. If you disengage, if you don't answer your calls, if you don't check your emails, you're going to be missing out on some really great info that at the end of the day is supposed to get you back to the closing table and approved for that home loan that you desire. If you kind of fade away, that's kind of outside of our control. And we want to see you get that approval. That's our main goal. That's all we want. We love putting people in homes.
Love it. Love it, guys. I want to be onboarded by Josh, and then I want Stacey to be my credit coach, man.
Yes.
You guys are awesome, man. Golly, man, just an awesome session today. I thank you guys for your time and everything that you do here for the company. You guys are I've learned quickly, you guys are two treasures here in My Credit Guy. So thank you for all you do. And I look forward to just jumping on with, hanging out with you. I'm kind of jumping around and hanging out with folks for the day or whatnot, and just getting to see what you do. And then I get to go out here and talk all this good stuff about you and share stories that we had with clients and whatnot. But I can tell everyone out there firsthand, just sitting with you guys, is how much we care and how much these folks get up every day to serve. And it's just a company of heart and service. That's the one thing I've learned in the short time I've been here, is just we operate with our heart and we're here to serve. And I've seriously seen just people, hey, this is all you need to do. Good luck to you. You don't need us. We don't need your, we're not out there paving the streets, pounding the streets for money or anything like that. We truly are a company that cares and respects everybody's situation. So maybe we just tell you, don't buy that car, don't co-sign for that loan right now, right? Maybe that's what we're doing. No, we're not. No, don't do that. Don't listen. Don't do that. Let me give you some say. I know you something. You got to put your mama hat on, right? No, no.
Yeah, no. That's
Josh, we're dads. We're yes, whatever you want. Yes. We're dads. I know I can't say no to my kids, but I can't. I can't. I can't. So my drives my wife's crazy. So for all those who joined us today, thank you so very much for joining us. You too, thank you for giving us a little bit of your valuable time today. I know y'all are busy. Thank you, everybody. If you've watched this on Facebook later or YouTube or whatnot, please, we're mycreditguy.com/you-made-it. You made it. So we're here to serve. If you need us, Curtis.